Good morning, everybody. Welcome to this month's investment update. My name is Marc Grigg. I'm one of the BDMs here at Generate. And today we have Dan with us, our global equities analyst with Generate. And today we're going to be talking about AI and what's all the hype about?
Well, Mark, as you know, AI is a hot topic these days with billions and billions of dollars flowing around the sector as various software companies try to build and create the winning generation-defining model that we'll all end up using on a day-to-day basis. And the latest earnings result that we just had kind of reflects the success they've been having so far.
Right.
Whether it be Microsoft with their co-pilots or Nvidia with their GPUs. These AI businesses are seeing a lot of orders flowing in and a lot of demand for their product, which is quite encouraging. That's leading them to increase their investments in the space. So between Microsoft, Amazon, Google, and Meta, the investments into AI are expected to increase by $50 billion this year, which is a 33% increase in this year alone, just between those four companies. And that's before we even start talking about some of the others in the space. So it's becoming increasingly clear that we've got this kind of AI arms race going on where companies are scrambling to try and build the best model that we'll all end up using.
So a lot of the listeners will be using AI, like things like ChatGPT, to write emails or marketing campaigns. Do you think that's sort of what all the fuss is about at the moment with AI?
That's the starting point, I think. The functionality is still quite clunky and we're still in early days, and there's a couple of points I'd kind of make about that. The first is whenever we kind of come across these technological innovations, it takes a few years before they kind of reach maturity.
Right.
You can kind of think about iPhones or the early days of the internet. The way that we interact with those things today aren't what they were like when they first came out. And so I believe that's going to be a similar sort of situation with AI.
Right.
The models that we interact with today will be very different to the ones that we interact with in 5 to 10 years' time. And then the other point I'd make is that we're seeing quite widespread adoption in certain specialist areas, even though it might not be writing emails, running marketing campaigns. Yeah. Places like coding and medicine development are already seeing really compelling use cases being used by AI to make their processes a lot quicker and a lot more efficient than what we've seen before.
Great. Do you think there's still a lot of growth to come in regards to AI?
Yeah, look, would be surprised if the kind of excitement were to stop now. I mean, if you look at last year, we kind of estimate that there was about $200 billion worth of total investments in AI for the entire year. And to put that into perspective, that's just a little bit under the size of the entire New Zealand economy. We'd be surprised if all the companies making those investments were suddenly to turn around and kind of say, stop, we've done enough, we don't need to do any more investments, particularly since we haven't found that kind of winning model just yet. So while these companies are looking and searching and developing their models, we expect the growth to keep coming in.
And in regards to sort of with Generate, how do we approach our investing in regards to AI?
That's a good question. So we kind of look at it through two lenses. The first lens is we look at the hardware required for AI, and that's a bit more of a clearer lens if we can look at it that way. These are the chips, the components, the servers, the networks that the software companies like Microsoft need to install to run the models. So the physical components. And that's a bit clearer because we kind of know from our research what those components need to be. And that's where the likes of Nvidia come in. They make those components, and that's where the demand for their products are coming from. On the other side are the software companies. So these are the Microsofts, the Amazons, the Googles. They're the ones trying to build the models off the components. And that's a little bit less clear because they're all, like I said, trying to find that winning model. And we don't know just yet which one it's going to be.
Right.
But in the meantime, while they're looking, a lot of their customers are making preliminary orders, they're trialing out pilots, and the initial results are looking really good.
Have you got any sort of success stories you can share with us for the listeners?
Yeah, look, we're really proud of the team to have been a part of the journey quite early on, as soon as we saw it taking off. And so, Nvidia is a big name these days. We invested in them about a year ago now. Yeah. And they've had stellar results. They're up about 200% since we initially invested.
Wow.
And so we're really happy to have delivered those returns to our members. And then another one to throw out there was a company called TSMC. So whereas Nvidia designs the chips for AI, TSMC are the factory that makes them. So it actually makes them from from the raw components into the final product. And they're up about 140% since we kind of spotted them a couple of years ago. And again, they're a huge AI beneficiary. So between those two kind of, like I said, hardware component-driven companies, investments, we're really proud to have kind of delivered those results to our members.
Excellent, thank you, Dan, and thanks for watching. If you do have any comments, please leave it down below. Thank you.